See, when market is in exhaustion positions like this, okay, at the time you have to understand here is the 30th January, okay, the price is already is in exhaustion position at that time, okay. So after that, you see here the breakout after the retest, and here is our entry point. I see 9 o'clock, 11, 13, and 14, and the market gone high, okay. Again in the gap, weekend gap, you see. Now it's become like in a bottom edge level, okay. This is a very strong bottom edge level. See, yes, you see here, this is the previous bottom edge level. It means at the time, see, only we are just taking like an exhaust positions, you see, not all these positions, okay. When price is in an extreme, see, like this, I'm just talking about. Price goes here like this, and they will stop at one point. They exactly stopped here. They came back. Now this become bottom edge level. See, they tested only one time here on 15th January, okay. If I go back and see here this quarter point to this quarter point, if I go back, see, they didn't come here up to. This is a perfect level. Now, the interesting part, what this means in the USD JPY, it's a consolidation. There's a lot of consolidation is here. You can see the price is in between. You see the difference here. 1, 2, 3, 4, 5. It's almost 1 week there. Just in sideways. I cannot call it like in a sideway. It's the market was not having anything, okay. It's just like a consolidation state. So for sure, if they break out here, I'm expecting the level they're going to break on the top side. I'm just thinking, okay, if they breaks bottom side, and we are going to take in a buy trade here. We are going to buy trade here. 108.000, okay. That is the interesting level, and this is also this level. So if they breaks, this level was not good. This is the level was not good. So we are just looking to buy at 109.078, and the final one, this round number, 107.860, okay. See how to find these top edge levels and the bottom edge level. I will say You see, that is the previously the price was came to an exhaustion position here. Okay, we have this support before this quarter point. It means we are just buying at this quarter point. It's just like 1.13000, which is a solid round number. And price already have to understand here. If the deck is like a 25% retracement, then they're going to stop here. And you have to understand the close of the day and the low of the day, both are the close say price. Maybe they can take in 25% retracement, or they're gonna drop and they will go high. Okay, so we are just entering the trade. It's just don't forget, we are just entering the trade only after the 9 o'clock. Don't try to enter the trade before 9 o'clock, because even though you got a signal, see, before 9 o'clock, it's just like a tempting. Okay, everything is perfect, and we are thinking before the 9 o'clock they're going to push. It's a trap. Even though they push, again they came back. So many times I was showed. Okay, see, now the before 9 o'clock, what they will do, for example, sometimes they will go like this. Okay, and people entered the trade, buy trade, and again they came back like this. If they didn't come, okay, no worries, we are just looking to enter the trade at the 14 o'clock. The only thing is we should predict at the 9 o'clock and the 14. Now you see, this is the top. See, these resistance, these consolidations, we are not looking at anything here. Okay, see, for example, these levels are, if you go back and you just watch, finding levels means, see, when in the past it looks like every level, it looks like a good level, but we are not taking like in all the levels. See, this is the previous resistance. For example, in this case, the breakout after the retest only one time, but I didn't see any reaction after that in the market. When price comes to this level, if it is really now it's become a bottom edge level, the price should respect. Even though in the gap, you see here, this is a perfect level. In the gap, they test this level and they push on the top side. But you see here, this was not that much good level here. Even though it's a previously resistance, now it's become support. They didn't respect this level. Top edge and the bottom edge level means what? I will show. I want a good example. See, this is an exhaustion position and this level. Okay. Now, you see, the price was here. It means now the price is testing this consolidation level. This consolidation level, but we are just taking previously according to the market range. This is an extreme position. Okay, now this is the extreme position. The remaining middle, all the levels, you can see so many levels are there. So these so many levels are there here, but we are not focusing. Because why we are focusing only these levels, I will tell you. according to this market range, this is the exhaustion position. It means this is the maximum they can push, and they stop here. Now after that they gone high. This is the maximum high they can push to the market. Okay, now the same level is was tested here. They created this high on 31st Jan, and after that they gone to the same level at the February 5th. Now they are in between these two levels. Okay, now we are just waiting up to this level, and it's already crossed over here. See the market in the gap. I thought like why they pushed here. I don't have any clues to explain about why they pushed like this, because this year you're going to see so many candles like this. So don't hold your trades in the weekends. It might be very risky. So the close of the day and the low of the both are not at the same level now. Is a low high 1.310. Yes, both are not at the same level just because of this candle. Okay, maybe there is a chance they're gonna push to downside, but how far means simply have to take the measurement of the previous day high to low. Keep this box here. You see the measurement box was exactly matched to the level of this bottom edge. So 95% there is a chance they're gonna bounce back from this level. So how far they can move? Again, we can take like this. You see, this is the previously a support zone. Now it's become a resistance. Okay. Simply you can take in a measurement box from the previous support to resistance. Yes, the market is following exactly this measurement box. Perfect. So the price is going to stop now exactly at this level, because the market is, this is the previous breakout level. Okay, this is the previous level from this support level, and after that market gone high. After the breakout here, they retest the level and they drop. Exactly now market is following this measurement exactly. Maybe they can go like this and they're gonna drop. Now this is the structure of the market. So you can do another thing here. You can draw this like this. You can draw like this and you can see the big picture now. You see the structure of the market here? The market is now it's in between this channel. Okay, so how far they can go, either the downside or top side, we don't know, but we find some levels. Here are the clues. They're going to stop the price at this level. Okay, if they didn't come here, for sure they're going to break the channel. They're going to break this channel. Okay, so how far they can go means they will go up to here or maybe here, but we can predict how far they can go also, because now this is the level. Okay, see, we need they break this channel. After, they should break this level also, or otherwise again the price will came back to inside of this channel, and again they follow the same channel. So the thing is, they should break this level, and we can predict like before the breakout measurement. Before the breakout measurement means, for example, now previous breakout before, it means this is the high to low. Okay, after the breakout we can project like this. It means now they're going to stop the price here. Even though now they're gonna break like this, then they can go up to here, because we'd already taken this measurement box. What I am saying, this is the previous support level they tested so many times. Okay, if price really wants to maintain this channel pattern, it means in a downtrend, the price will not close, the candle will not close above this zone. If they close above, then the uptrend is going to start in Euro CHF. Okay, so the price will go, we already taken the measurement of the breakout before, swing high to the swing low, and we're just simply keeping on the top side here. This is a resistance. So now the price was exactly matched to this level. Okay, now again they came back, we are just entering our trades. So you can take now the measurement of the clear swing low to this swing high, and you can project this clear bracket here, and you will get another few levels. This is the 50%, and this is the 100% here. If you go back and you just watch, for sure you will find out a level. See here, this is the 50%. 1.14865, the price is going to drop in Euro CHF, because you see here it's a double top, and after that they tested this level. They tested this level 4 times, 5 times continuously. You see here, yes. See, this is the first time the level is tested on 12th October. Okay, and after that they tested the same level 2 times here, very closely to this level. The price was stopped at this quarter point 2 times, and again they created a double top and they drops. And what is the date here? It's the 19th October and 28th October. So after that the price didn't reach up to that level. So finding levels is like this. Okay, we didn't do anything, we are just completely projecting everything, and we find that levels, and we notice that this is the level is very strong, super strong level. The price is going to drop from this point on. Okay, now I'm just deleting and everything these levels. Now you see here, now we already find out the good support level to enter your buy trade is here. And directly you can use the 50% from the major swing high to the swing low from this level. From this level to if price comes to up to here. Yes. Now you see the 50% was exactly matched to this level. From this level to this level is absolutely matched here. So the price is going to stop exactly in between the quarter point 1.12750 and 1.12500. These are the predicted levels to enter the buy trades. And these are the level is very strong. It means at this quarter point 1.15000 level in the Euro CHF. Okay. If you take the same level, previously this is the top edge level, and from this level to we predicted a level up to here. Okay, previously we do like this, now we are doing in a reverse side. Now this will become after this breakout, if price will start an uptrend from this breakout, from this bottom edge level to, if price goes to up to here or maybe here, if it goes to up to here, then this is the 50%. This is the 50%. If price stops here, this is the 50% now. So this 50% was exactly matched. Exactly matched here. The previously support level breakout after they retest this level and they drop here. So the price is going to drop exactly at 1.14865, meaning this round number 1.15000 level to 1.14750 is the sell. It's a very good level to enter your sell trade, and the bottom side level which I previously told, those two levels are fair to enter your buy trade. Focus only on those two levels, because now you see the trend is super strong. The cloud changed direction to bearish here on which day is February 5th, Feb 5th. And after that, you see the cloud is still in bearish. Completely bearish cloud. The trend is super strong. So before we are entering our buy trades, you have to think about it. You are entering your trades opposite to the strong trend. It's not like a normal trend. It's extremely strong. We must be very careful. Let's come to Euro USD. Last time Latanya missed. Somebody is asked about like 9 o'clock, I want to take in a buy trade. They said, and I said, no, if you enter the buy trade at the 9 o'clock candle, who knows whether they're going to break or they're going to push downside. See, they push to downside. Clearly. Why 9 o'clock? Because most of the time, 9 o'clock, they exchange the price a lot. When compared to 14 hour, the 9 o'clock is, you can catch some big moves every time the 9 o'clock. Finding levels means only thing is when previously these zones cross each other. These zones. This zone. So we are just trying to enter a sell trades and the buy trades, you see. Reversal before day, the close of the price and the low of the day, both are at the same level. Next day, the market pushed to top side. And after that consolidation, and again you see here, the previous high of the day, the previous day, high of the day and close price, both are at the same closely. The next day, they took the 25% retracement and they drops hardly. The first clue you have to find out every time. On the next day, the reversal is going to take place. The day before, they are going to stop the price exactly. If it is like a top side reversal, they are going to stop the price. High of the day is equal to close of the day. If it is a bottom side reversal, they will stop the price. Low of the day is equal to close of the day. Then it's a clue the market is going to take a turn. Okay, if the same situation was happened here, the same situation was happened here, this level, the close of the day and the low of the day both are at the same level. Next day, small retracement in the Asian session, and 8 o'clock and 9 o'clock candle, they push here. If you go back and you just draw the level like this, you see 50% level. Previously stop level here, high of the day and close price, and after the next day, they stop the price to retest. And you see here, it's a 14-hour, I think. Yes, 15 in the 14-hour candles. You can sell again. If it is like a market wants to maintain a sideway, for sure, maximum before 15-hour candle, they're going to close above. And if they close above this level, again, you can expect on the next day, 9 o'clock, we are going to sell at this level. Sometimes they're going to create a double tops or double bottoms. It will happen, okay? But they stopped exactly at this 50% level. Now you can project. Now you can start projecting the price. See, from this level to this level, their maximum range. We are just simply projecting the price on the bottom side here. See here. This is the first projector box. And this second projected box, 50%. They exactly, now you can see here. So this is the level. Now the Euro USD will gonna take a turn. Euro USD is going to be high. is just like 42 pips is difference. Okay, because see, wherever you take this measurement, see, from any level, you can take this from this high to this low, you will get in a minimum some levels, because every time market, the structure is based on these price boxes. Why it was stopping all the time? Because this is the reason. See, for example, this is some X person. That's why I don't like MT4 sometimes. See, some X person, where is here? For example, size started from here at this level, okay? So we don't know what is the destiny of size, okay? Where he wants to go, we don't know. For example, the only we got a clue from his past behavior. I mean, from the past range or maybe the past structure of the market, whatever it may be, okay? And we got a clue. This is the first clue. The first clue is, just calculate here, 77 pips. It means he has started driving his car from this place and he has just stopped driving here exactly after like a 77 miles. Okay, it means in trading we calculate like pips. Yes, you guys just try to understand what I'm saying. So he was stopped here at this point. It doesn't mean he reached his destiny. Okay, still we don't know where he wants to go exactly. The only thing is we got a clue from his side. That is, stamina is he can drive without taking rest. He can drive 77 miles. It means 77 pips. That is the maximum stamina from this person. That is the only clue we got from the market. In the same way here, these sellers, how far they wants to go, we don't know. Okay, but we are just trying to find out the seller's clues. Here the seller clue is maximum they can push the market like 73 pips. So that is what we are just projecting. Okay, so they push in the first day like 77 pips. Okay, we are just projecting 2 times. It means as a round number is just like 70 pips. For example, there's maximum they can push to downside. Okay, we are just doubling. We are just doubling and we are just projecting the chart at this top level after, not before. It means from this level, it means they already pushed the price to 70 pips and whatever they want to do, they can do. And after this breakout, this is the next 70 pips. Okay, next 70 pips level, this is the measurement box here. And this is the only clue we know from this market. Now this time how much they pushed here, when the price reaches to this level is 130 pips. It's a double already. Okay, now again the price comes to, see, again the price comes to here. This is the final maximum because we are just projecting the price after this clue. Okay, once we got this clue, we are just projecting. So this X person was starter and they stopped here. Okay, maximum, we are just doubling. The first box is we are just doubling the range. It's possible to reach up to this level, but up to the second box 100% it's not possible, because you have to understand, when you see the measurement box is a big range is there, they're going to take it on when price comes to the second box 50%, because the range is too high. Okay, if it's just like a 30 pips measurement box, you can expect they're going to come up to the second box 100%, maybe sometimes 25% extra. But you see here, it's a 70 pips. We are just doubling twice here. It means from up to here, it's a 70, and it's an again 70, and again it's 70. My question is it possible to any person see? As today, you're just running in your treadmill, for example, just like a 5 miles. Okay. On tomorrow, you can reach up to 10, but not 15. That is the logic here. So here in this way, we are just projecting the range. I mean, the strength of the sellers and the buyers. We are just taking the market clues, like previously, what is the maximum range they can push in a day, and the minimum range they can push in a day. Okay, so this is the maximum range. You see, then after that, you see every day they're just pushing a little bit. These are the minimum ranges from the sellers, minimum they can push, but this is the maximum push we are just taking into measurement box. Now we are just projected. So this level, you see here, this 50% level, I'm just deleting these lines. This 50% level was exactly matched to the bottom edge level of the previously 24th Jan. The low of the day and close price, and the price moves to high. Okay, the same thing here is also happened. For example, we don't know how far these buyers can go. Okay, the only thing is we are just trying to predict how far they can go. Okay, so in this situation, previously we calculated the seller's range and we are just projected the price in the same way. Now we are just trying to match this level, this top edge level. We are just projecting from this level. Okay, so this is the maximum range they can move the market. This is the maximum. Okay, so we don't know the market on 28th January. We know up to 25th January, because it's a reversal. Once you identify this is the reversal, you are going to project the maximum range they can push. You have to project the price boxes and the minimum range also. See here, this is the maximum range. This is the only clue I got from the buyers. I'm just projecting the price here. Now you see, this is the 50%. This is the 100%. Okay. You see here, the range is too high, 116 pips. Okay. The range is 116 pips. That's why the market didn't reach up to the first box 100% also. Before this 100% level, they reach only 75% retracement from this measurement box. Okay, the minimum range. Now we will calculate the minimum range. Minimum range means see from this high to this high is a 53, is 38, is a 40, is a 38 is the minimum range. Okay, so we are just taking this 38. You see here, this is the resistance here. And you can see here, this is the 50% of the second box. Second box 50%, the price is exactly stop here. Quickly, I can zoom in here. See, exactly you can see resistance here. And this is the green line was a 50% of the minimum range measurement box. Because here the maximum range is a big move. See here, 130 pips. If you project the price like twice, it's up to 250 pips more. It's almost like a 1/4 point, 1/4 quarter point. So it will not happen all the time. That's what I said. You have to take the minimum, how much they can push, how many pips they can push minimum. Here we know the minimum is 38 pips they can push, and the maximum is 130 pips. So if you double the 130 pips, you will get these levels and these measurements. If you projected the minimum range, how much they can push, they stop the price exactly at the 50% of the second box, and the 100% of the second box is equal to match with the maximum range first box. 100% is equal to the minimum range 100% second box, and in between these level the quarter point is very strong here, 1.15250. This is the level seller's highest price. This is the seller's highest price. Now we predicted the seller's market and we got these levels. Now this is the level is buyer's lowest price. Okay, in this buyer's lowest price, you have to find out the strongest round number. See, 1.12750 and 1.13000 level, which is a solid price line. The market is going to take a turn. It's a very closely came, but they didn't test that level. Okay, so we don't know. See, we don't know. We already taken this measurement also here. If you go back and you see here the low of the day and the high of the day and the low of the day here. Okay, if you keep it like this, it's absolutely, now you see here 25% means absolutely here. This is a support level. This is a 25% down. You can see now here. You see, this is a support level previously. This is a support. They stop here. If they took like in a 25% retracement, they're going to stop the price exactly at this solid number, 1.13000 level. Now the price will go high. Okay, once they started pushing, we are just taking the maximum range and the minimum range of the buyers. Again, what we do here at this moment, we just taken the maximum and the minimum price projections, and at this seller's market, at this downtrend, we just taken the maximum range here, and still the market is following the range box perfectly. So with the projector price, we just find some clue like this. Okay, see here, So this is a solid price line, 1.1300 level. The price is going to take a turn. After that, once we have to wait to the exhaustion position when these two zones cross each other. We are just taking the minimum range of the buyers like this, minimum range, and the maximum range. And we can project the double boxes twice, these projection boxes. You have to wait and try to find out the level and try to enter the trade exactly at the 9 o'clock. Okay. So another thing is, I will tell you another thing. If the same situation was happened, not outside of these major zones, but inside of these zones, see high of the day and close price. Next day, take a little bit retracement and the price was dropped exactly, see, before 9 o'clock here. It's already dropped at the 9 o'clock at this round number. And they gone high. It means for sure, if high of the day and close price both are at the same level, for sure the price will drops and the next day here is 28 pips. If the same situation was happen in the middle of the trend, for sure next day they will take a small retracement and they will go high. If the same situation was happen outside of the major zones like this, then it's a reversal. The low of the day close price is at the outside of the zones, it's a reversal. If the same situation was happen inside of the, see, it's not that much close here, but high of the day, close of the day, the price is just like a small retracement. They will not drop because it's not a reversal. If the same situation was happened here and it's a reversal, the price was dropped. So this is the way to predict the levels and to confirm the trend. And with this level, we are entering the trade exactly at the 9 o'clock and the 14 hour. And why all the price lines are not respected? Because it will not respect at all. See, it's a breakout here, it's a breakout. See, directly they are just breaking. You see, they didn't test directly, they are just breaking these round numbers. Because these round numbers, the price is going to respect. Is there any sellers buyer's lowest price or seller's highest price is there? The price is going to respect only those quarter points, not all the price lines. See, these all price lines are the market will never respect. Only when you are having any good price. See, now this is the seller's highest price and the buyer's lowest price. Even though we don't have any resistance here before, okay, but this price is the measurement of this seller's maximum range was given the previous strongest support level. So these two quarter points are important. 1.12750 and 1.13000 levels are the price is going to respect these two quarter points. Not all the quarter points are the market will never respect. They don't care also. And this is the fact. They don't care. See, these candles are just moving continuously. They are just breaking every quarter point. And this is also same. See, continuously they're going to break every quarter points. You have to focus on these quarter points when you find any quarter points which are very closely to your buyer's lowest price and the seller's highest price levels, then the price is going to respect. So when price reaches to the buyer's lowest price, you have to focus on the solid price lines. Because market most of the time they will take a turns exactly at these round numbers and these round numbers. So in this way, very easily we can predict the level. And not only that, okay, and not only that, we can enter the trade exactly at the right point. I mean right time. If you enter the trade before 9 o'clock, it's just like a tempting. For sure, they're gonna hit your stop loss, and we don't know in which way they are going to push. Also, you will be there in the trap. Even though you got a strong signal, even though the level was very strong, whatever the level you predicted, for example, here in this case, okay. So in this case, the price was came up to here, for example. It was testing, but the time was 7 o'clock, for example. 7 o'clock, the price was dropped here. You wants to take the trade. Of course you can, it's up to trader. But the thing is, even though you enter a buy trade, we don't know. We don't know. See, we know the level, but we don't know they're going to push the market like this, and the candle leaves a big wicks like 40 to 60 pips, and it's going to hit your stop loss. Then the market will go to top side on an 8-hour candle. They're going to hit the seller stop loss, buyer stop loss 2 times continuously. Then they will stop making trap, and they will push in a same direction what you are expected after 9 o'clock. We don't know how many times they're going to hit your stop loss. See, the candle never closes below this level. Once you analyze in this way, whatever the level we are predicted, for sure they will respect. But we don't know how long they're gonna leave the tails, big tails. The 7 o'clock is was testing. It's just like a tempting. You think like they're going to push before 9 o'clock? It's a foolishness. It's a foolishness. Because every time what they're doing, I was showed so many practical examples. Every day you already know 9 o'clock, they must be do something. You know already what they're doing every day 9 o'clock, even though you are not waiting means it's a foolishness. It's just like a tempting. So once you enter the trade, then big candle will come like this 30, 40, 50, 60, 70. Then you can't control your emotions. Then you will close the trade. Once you close the trade, the last 5 minutes of the 1 hour expiration time candle, the candle body will leave a big wick like this. Then the bearish candle changes into bullish. Then you will realize that the 8-hour candle, you will enter again the buy trade. Maybe they will do the same thing at the time when you enter the 8 o'clock candle. If the majority of the traders are enter the buy trade, for sure they will do the same thing again. They will come up to like 40, 50, 60 pips again. Again, they hit the stop loss of the buyers. At the time, if you enter the buy trade, if the sellers, majority of the people are taking a sell trade, okay, they're going to push downside. If the majority of the traders taking a buy trade, they wants to push like a, they wants to hit the stop loss of the buyers and sellers. At the time in which direction they're going to hit the stop loss, it's up to the majority and the equity of the market. If the 85% of the traders are taking a buy trade, they're going to push the market to downside to hit all the people's stop loss. If people taking a sell trade, they're going to push like this. Even though they push like this, the 9 o'clock candle came back to test the same level. At least they come very closely. You can enter the trade, but don't try to take trades before 9 o'clock. Because with my experience, I'm saying they're just going to hit so many times, not like it twice or thrice, so many times. They want to tempt traders to enter the trades, and after that they will show their power. So many times with my live experience in 2017, I will tell you something. Same, the market is like this. I know it's a sure shot they're going to push the market like this at this level. How they push the market like this. So in this way I was expected. Okay, so everything was perfect at the time. I'm i'm not sure about what 9 o'clock they're doing every time. Okay, but I know all these things which I was explaining about these projecting boxes and something. So I was entered the trades, and I'm just watching in the M15. The candle is moving like this. It's just like a 30, 28 pips or something. And I thought, like, okay, the trend was started in New York. I can see the big moves. I was just go to outside. It's just like after 20 minutes, I came back to my room. They hits the stop loss. They hits my stop loss 56 pips. I thought. I was just shocked. What? I was opening H1. In M15, the candles are closest below this level, and I thought like the price is going to move down. I was closing my trade, and after that, I look it into H1 trend. The After two candles in M15, they closes below this support level, but in H1, the candle leaves big wick and it closes above this support, and they gone high. So what I'm trying to say is, even though the entry was strong, the predicted level is 100%, everything is perfect, you feel, even though don't try to enter the trade before 9 o'clock. We don't know these market makers, they can do anything before 9 o'clock, anything, but not after 9 o'clock. Why not after 9 o'clock? Because they can play with traders, but not with big investors and the big banks. If they do the same thing with the big banks, can you imagine? There is no more Forex in this world. If once the investors are going to start losing money, so nobody wants to invest in the companies, and you can see the profit factor is going to reduce on that country economical growth factor. The thing is, they want to play with traders, not like big investors and the big banks and the big companies. When they're involved in the trading at the 9 o'clock time, they don't want to do those kind of trappings. So you have to understand, we are just entering the trade, and our trading time should equal to the big banks involved at the same time we are entering our trades. For sure, we will get minimum profit. There is no lose. It's all about timing. Let's come to SNTR. Okay, see, what is this level? Yes, I will start from here. Yeah. In how many ways we can use this system? For swing traders, I mean the long term, the reversal strategy people who love to trade, they should focus only on this reversal, and the zones cross each other. At least the price should cross at least the zone, and we get a short signal. You can enter the trade, and this is your stop loss. So in this situation, you already know this is a completely non-repaint, right? This cloud and this vertical signal and these arrows are non-repaint. So the reversal happen and cloud changes bearish to bullish. You enter the trade and you won, and the same situation you won here. And the same situation here, bearish reversal, cloud changed the direction and they came back here, and this is your stop loss, right? They didn't hit your stop loss and they gone high. Okay, and after that you see how many days, 1 2 3 4 5 days continuously. Okay, and after that the cloud changes the direction This is just because of something. Cloud changes the direction. If you enter the trade and you see here, you will get the minimum profit. Again, they bounce back to retest this level, and the next day 9 o'clock you have to wait. If price is at the on the cloud, okay, or when it touches here, when any see the candle changes into bearish, and you can enter the trade. Okay, once you enter the trade, because sometimes the market will not come back to test the cloud like this. Is there any strong breakout happen, then market will continuously drop like this. They didn't test the cloud. So in this situation, you enter the trade here. For example, you enter the trade here. This is your first entry, and after that price gone to retest, okay, the bullish candle changes into bearish next day, and now this is your second entry. If your first entry and second entry, after the price closes below your first entry, you can close this first trade and you can hold the second trade. You can hold the second trade, and you see, you have to find out these levels, and you can use it like a take profit or book the profit and keep the stop loss here. You invested, like for example, $100 you invested in the first trade here, okay, and $100 is here. The next, the price came to here, you can book the 50%. It means from this $100, if you book the 50%, means you will get like it's all about like 35 pips. You will get the profit. Okay, you already advancedly you book the profit. So even though after it hits the stop loss, it doesn't matter. Just like 5 to 6 pips, 10 pips, it doesn't matter because you already booked the profit 35 pips. So in the same way, if you go back and you see, at the time the reversal is here, because you see this is the consolidation part, and we got a short signal here at this point. Okay, it means the reversal is here or here. Maybe we got a short signal. You can enter the trade and use this resistance, or maybe top side of the resistance quarter point, you can use it. It's up to trader. Once cloud changes the direction here, this is your entry. Okay, this is your entry point, and this is your stop loss, this resistance. If it hits, for example, in this situation, if it hits here, okay, then again price will move to more on the top side like this. Okay, then you will get in a short signal, and after that cloud changes the direction. Now you can double the bet size to recover your previous lose. If you double, you invested $100 here and you lost 25 pips. Okay, the second trade, if you invested 200, then when it reaches to 25 pips, okay, because your previous lose is 25, the second trade you invested $200 contract, if it reaches to 25 pips, you can book the 50% from your second trade. It means $200 you invested, so you are booking 50%. It means you are just coming out with $100 from your bet size, and $50 profit. You are just taking 50%. It means $25, which means you are just booking the previous lose in advancedly after you enter the second trade. Previous you lose $25, you invested 100, you entered the second trade is a 200. Now when it reaches to just 25 pips, you can book immediately the 50%. It means now you already recovered your previous lose. Now you're just holding. Once you got like a 25 pips more or 30 pips more, when it reaches like any support or resistance like this, then you can book again the 50% from your second trade, which is like still you're holding $100 contract here. You are just booking the $50 and the 50% is from this profit. So the remaining 50% you can hold until you get the opposite reversal or cloud changes the direction. So it's up to you. So in this way, you can manage, okay, and you can recover your losses. The only thing here, you see, this short signal and it gives minimum, long signal, it gives minimum, short signal and long signal. And you know this is a non-repent. So that's why I can say previously here is the reversal. And we got a short signal and price consolidate here and the drops. Again, you see here the same level. The price came here and the drops. You have to focus on finding levels and support and resistance also. So this is a reversal strategy. Let's we talk about accept class, okay? Without doing anything, we can use this system in a normal way. See, I will show you a few things here. We are not analyzing. It's just an idea. If you analyze, you can enter the trade before you get the confirmation. And not only that, if you analyze in this way, you can find out very easily whether it's a pullback or it's a reversal. So if you follow the low of the day and the high of the day, these things, you can find out the next day they're going to retrace or they're going to take a reversal. So without doing any analysis, how can you recover? Okay, and how much accuracy is there? You just go back and just watch it here. Bearish cloud, and you got the pips, okay? And bullish cloud, and cloud is continuously going high. And bearish cloud here, and price tests that same level and the drops here. And bullish cloud here, even though you get minimum pips, you got just minimum pips. So 21, okay? And the bearish cloud and the price continuously drop here. See, this bullish cloud, okay, you enter the trade, it's just 8 pips. It means it's a losing trade. It didn't give at least like a 10 pips minimum. And you lose here, okay? You lose here. Even they came back here, it changes here. You see the Heikinashi was changes into bullish. You enter the second time and you lose here, 2 trades, okay? If you double the bet size, if you enter the short signal, again the price came here and it changes into bearish. If you enter the trade to double the bet size, see, it recover the previous buy trades immediately, 30 pips. So without doing any analysis or without doing anything, you can enter the trade like this. So in this way, why I'm saying like the cloud and this volume confirmation vertical signal highly accurate. Why I'm saying highly accurate? Because you see here, the cloud changes the direction at the time this white reversal at here, okay? Because it's these green and red arrows are non-repaying. We got a sell signal here and we got a buy signal here. It's a losing signal. So cloud changes the direction, but we didn't get any vertical line signal confirmation here, right? But we got a vertical line confirmation here. But even though now the cloud is showing opposite direction. When cloud is showing bullish, we didn't get any long signal confirmation. When cloud changes to bearish, we got a long signal confirmation. It means both are opposite here. So we are not going to enter this trade. We are not going to enter this buy trade and we are not going to enter this sell trade. But for example, here you see short signal and cloud changes the bearish. And you see, we got a short signal here on this candle, but cloud changes the direction here. And after the pullback, sometimes you will get these signals from this vertical line confirmation, okay? For example, here you see, we got a short signal here because the volume was declined. And you see here, the resistance was breaked here, and the same resistance was candle closes below, and the volume was decline here, and we got a short signal. Even though we got a short signal, we are not entering the trade because the cloud is still showing bullish. See how many signals you can filter out with this combination. See, we got a short signal here. We are not going to enter the buy trade, sell trade. And we got a long signal here. And the price came back to retest the same support level here. You see, this support level, they're just maintaining this support level like so many times here. So we got a long signal and the market moves to top side. So we are just avoiding the short signal because the cloud is showing bullish. And again, we got a short signal and you see the big bearish candle, but cloud was not changing the direction here. It means we are just avoiding these two signals. These are false. You can call like a false breakout or anything. See, cloud changes the direction and we got a long signal and price gone high, 26 pips. And we got a short signal here and cloud changes the direction, you can enter the trade. And after that short signal, we didn't get any long signal except here. Here we are not taking trade because the cloud is showing bearish. If cloud changes into bullish, we can enter the trade. Here the cloud changes the direction, but we didn't get the confirmation signal. It means the both are related. See, I will tell you one example. These two combinations are with the two different formulas, which is based on trend, this cloud, which is based on volume, this vertical line confirmation, okay? In a room, there are 5 members, for example. You forget keys. Now this time I can use Latania's name. So Latania forget her car keys somewhere in her house. So there are 5 members are there in her house. Everybody is saying like you forget in your pocket or you forget it somewhere, you forget at terrace, you forget at the dining table somewhere. Everybody is saying in different places. But if all the people are saying at one place like you forget your car keys in your car, then the prediction is gonna be right because the 5 people are, previously they said different places. Now the 5 people are saying at the same location. It means there is a high chance is there, maybe she can find her car keys in the car because 5 people are saying the same answer. In the same way, I was used so many formulas to predict the trend. Okay. So these trend formulas, in this case, the trend formulas are showing bullish, but these volume formulas are showing, they didn't show anything. But now the trend formula is showing to bearish, but this volume formula is showing in opposite direction like bullish. Both are not matched. If both are matched, the market is a 90% accurate. See, short signal, cloud change the direction, market drops. And you see these formulas, there are bunch of formulas are there in this vertical line confirmation. They all are showing bullish, and bunch of formulas are there in the trend. They're also showing bullish. That's why the market gone high. Okay. So in this way, these formulas are showing bearish, but cloud formulas are showing bullish. Both are opposite. But here both are matched. Buy signal, cloud changing into bullish. Both are showing the uptrend. The market gone high. Because these two are different things. If both are showing the same direction, for sure the market will move 90% on the same direction. That's what here happened. bearish the cloud is showing, and we got a short signal. There are a bunch of formulas in this trend. They decided the price is going to drop. For more confirmation, this volume formulas also showing to downtrend. That's where the price drops to downside. Sometimes you will get short signal, and before this short signal confirmation, the cloud will changes. But sometimes you will get short signal before, and after that the cloud will change the direction. Okay, and you see here, I will tell you something. This short signal before, here is the pullback, small pullback is there. It's like a slight pullback. And after that, you got a short signal here at this candle, okay? It means you got short signal after this small slight pullback after. But here in this situation, there is no pullback, the market gone high. That's why you got a short signal in time. Now you got a short signal here because there is no pullback. It means it will not harm your entry. It will not give any drawdown. Okay, then the cloud changes the direction, small retracement, and the price started dropping. It means if there is no pullback, then you will get the short signal. If there is a pullback, it's gonna give you a big drawdown. You will get the signal after the pullback. After this pullback, after you will get the short signal. So the only thing is 95% trading is based on psychology. Why I'm saying like in psychology? Because see, you should control your emotions. Then only you can win. Whatever the trading system, whatever the way we are analyzing the market, predicting the true reversal levels, and everything is perfect. But you should have the proper money management and the disciplined trading. Don't expect more from the forex market. Even though sometimes professional traders also they're gonna lose. Just try to focus only on few things, not on all the things. See, I don't want to reveal few names, but to be honestly, it's not about like I don't want to give this system like in thousands of people. It's not just like in a selling purpose or something. I want to give in a system which will give the exact information about the current market conditions. Because if you can get the current market information from your system, for sure you can predict the way you want, and you can confirm your own trades. You don't need any confirmational signals. The only thing is traders should know only key elements from any system. For example, the system which will shows the extreme exhaustion positions and the support resistance levels, and about the trend. Okay, if you know the extreme exhaustion positions, you can find and they are visible on your chart with the system you are just using, then it's easy to confirm your trade, because you saw like the market is extremely overbought here. Yes, you are just trying to look at taking a sell trade. Okay, if price is extremely oversold here, you are preparing your mind to take in a buy trade. We need just an information. We don't need much more. So when I'm just developing all these things, and I will tell you something, okay? See, it's just like in a mantra I can call like, yes, We trade to live. We are not like others who live to trade. Okay. We know trading is not a get rich quick scheme. We understand there is no shortcut to become successful and the profitable traders. We can only take what the market gives us. We do not force the market. We accept losses as the cost of doing business. And we are professionals, and professional looks for a reason not to take a trade. That's what I am saying every time. All the time, don't look the market to enter your trade. It's just like a selfishness. Why are always you are thinking to make money? You have to watch and try to understand what kind of information you are just getting from the market. First of all, that is the important thing. Okay. And what is the difference between good traders, I mean amateurs, and the professional traders? Amateurs are manage money by taking risk, but professionals manage risk by taking money. So 95% trading is based on psychology. So you have to understand, if our entry is strong, we no need to worry about anything. So that's what. So anybody is having any questions? Anybody? Now, guys, you can ask, and I will say, I will give more explanation. Anybody is there? Or everybody sleeping?
I'm here. I'm going to stop the recording.
Yeah, you can stop the recording, and you